Welcome to our AI, M&A, and valuation and hot trends webinar. I'm here with Philippe.
Hi, everyone.
And we're gonna guide you today through our thinking around what's happening in AI, and a lot is. And obviously, like everyone, we're trying to keep up. There's so much going on, we might need to adjust the webinar during the session, because there might be a sudden release of something and will be a game
IPO
changer
filing,
again.
new IPO filing.
For instance, yeah. So anyway, we have a lot to unpack today, but maybe we wait a few seconds for everyone to join before we start. As always in our webinars, feel free to ask any questions you might have. Drop them in the chat, and we'll try to take them in either during the session or after. Awesome. So let's go through the agenda real quick. We'll try to do it in 45 minutes, although we actually have material for an hour and a half. So we'll skip a bunch of things. We try to be grounded in reality, not fall into any narrative, like gloomy nor hyper enthusiastic. Try to be realistic and balanced so that you can make up your mind. So anyway, so we'll discuss AI in the public markets, M&A in private market, obviously, AI funding trends, and then we'll try to wrap up, maybe say a few words about what we think the future will bring, and we'll leave time for Q&A. Anything to add, Philip?
No, I think it's a good plan. Yeah, let's jump right into it.
Okay. So the first thing that comes to mind when you think about AI and financial market is the B word, bubble. So we wanted to look at historical trends, and here we present this, like, the longest time series I think available for financial markets, which is Schiller and Professor Schiller's cyclically adjusted P ratio. A very quick explanation. PE, price to earnings ratio for the broad equities market in the US, obviously, and cyclically adjusted because the earnings is the 10-year inflation adjusted average. So it shows you not what the current sentiment of the market is, but how does it trade on a more longer term perspective. So does it recognize value fairly, or does it overpay or underpay value? Expressed by cyclically adjusted, the value expressed by cyclically adjusted earnings. And I personally like this chart because it gives you a very long-term perspective on what's happening, and a perspective that goes beyond any person's lifespan. It shows gyrations are common, and honestly, it also shows that there are up cycles and down cycles. There have been always, and we shouldn't expect this time it's different. And we've entered this bull market really in 2008-9, roughly, the most recent one. And apparently we're still riding this wave. These waves, usually, the upswings they take, you look at this chart, the one in the 90 that started after the Second World War, lasted until 1929, so that's years. Then after the Great Depression until end of 60s, that was 30 years. Then in the 80s, we started to go up until 2000 and until 2001, until the dot-com bubble burst. And here, I mean, the new cycle started apparently in 2009, roughly. We've been in this 18 years, 17 years, yeah, roughly. How long can we go on? I mean, it's definitely a bubble. I think we have no doubt because they always occur. But honestly, does it last for 10 more years or two? Very hard to predict, actually. And we can have our barrel bull discussion. Really, you
Yeah,
feel we will go on like this for 10 more years? Or
not for 10 more years. When I look at how long this ratio was above 30, not for a long time in 29, for in above 35 at the peak of dot-com bubble, also for not a very long time, maybe a couple of years. So now as we're entering it, I think it's maximum 2 years or so, just looking at the historical patterns.
until we started, I also thought that. But
Yeah,
now that I think about it, I mean, such a revolutionary technology, AI, that the narrative can drive the market for many years to come. I mean,
yeah,
it's
no,
a very good narrative.
I mean, no one
So
says it shouldn't go to 50 or 60. Yeah, it peaked at 32 in 29, but then went to 45, might go to 50, 60 easily.
yeah, so I think the market is overvalued, but maybe it will continue for the next 10 years. I mean, it's so hard to predict.
If you add a couple of trillions of dollars of market cap from SpaceX, OpenAI, and
Can be
Tropic,
even more overvalued because, yeah,
earnings,
earnings will go down, so it will automatically move up this chart. That's gonna be insane. Yeah, they're gonna go move to 56 territory probably in the near future, I'd say.
but usually also how some people look at it as that what's the next 10 years return if you buy at a different price earnings multiple or different Schiller PE. And over the next 10 years, the return is not going to be great. So if someone's in the market for a long time, then now is looking at historical data, not the best time to buy, I'd say.
No, definitely. But then again, hard not to buy into the narrative.
Yeah, as a
Hard to
narrative.
resist. Such a good narrative.
Yeah.
Yeah, the fear of missing out.
We zoom in a bit at what actually drives this.
Yeah, let's do that. Let's do that. Yeah. Good. So here we have two lines. One represents the S&P 500 index, the broad market index. The other is our proprietary AI index, equal weighted. And we have the indexes on a log scale so that it's easier to compare relative moves. So it looks like there is a similar pattern happening here, like in the early 2000s when the AI companies, because we tracked them down back to 1995. I mean, what we now understand as the AI supply chain have also boomed on the infrastructure build out. At that time, it was telecom and fiber in particular, and networking infrastructure. And a similar thing has happened. A similar untangling happened recently. Started around 2020 to 2023. That our AI index started to move faster than S&P 500. I don't think this is complete. I mean, I don't think this is yet all of the movement that we will see. I think there will be even more exponential growth in the AI stocks. Philip, your thoughts?
Yeah, I think for me, looking at this, I was just very surprised how the same companies that we added to our AI index based
Yeah,
on participation in current supply chain, how many of those were listed in 2000, 2001 and went through the same cycles, networking, servers, all kind of construction companies, electronics, manufacturing services. So all of those were still around during the
yeah,
bubble, kind of now really having a revival with the current capex in AI. Yeah, and the story I think is the same. Yes, there's just so much capex that all the supply chain benefits.
yeah, yeah. We can show actually who benefited the most. I think that's interesting to enhance this view.
Yeah. Yeah, so because our AI index, how we came up with it is we looked at one big event when markets dropped a lot during the release of DeepSeek. Yeah, so when everyone thought, okay, AI is going to be 10 times cheaper and you're not going to need all this billions and billions of investment. And so a lot of companies across value chain dropped that day. And then we collected and analyzed those, okay, who of those are in which category and kind of how they performed over the past couple of years. And here you can see subsectors, the best performing, the worst performing in the AI supply chains. The best performing is something like data center EMS. So those are electronics manufacturing services companies, basically, to whom you can outsource your electronics assembly. And those went up by more than 800%. There was a bit of a multiple expansion. So before those were boring companies trading at 5 times EBITDA. Now those are picks and shovels suppliers. So the narrative changed a lot. So now those trade at 25 times EBITDA and their earnings also increase. So that's where the stock prices growth come in. And then all kind of suppliers of equipment and hardware through data centers, starting from HVAC to electrical equipment, chips, the companies that construct that, uh, semiconductor supply chain, and kind of looking at this, really, you can say any sector which is related to AI benefited over the past 3 years. Massive difference with S&P 500 and overall market. Overall AI index 550 points, S&P 500 just 190 points.
Amazing. And these used to be boring businesses.
Yeah. Yeah, it's high capex businesses, low margin. Now priced quite high. We'll see how that goes. If you're saying this is a bubble, then those will have to go down, and this will be a cycle. And I think a lot of those are very cyclical sectors where you can have big earnings for some time and then sudden drop. You overinvest in capex, you overbuild the factories to produce HVAC. And then if something bad happens to this capex, and you're left with overcapacity. I think that's why this Schiller PE ratio is also so good, because it looks at the 10 years in the past, so it removes the effect of the cycle. So even if you triple the earnings in some particular year, kind of it assumes that what went up must go down, and that every industry operates
Yeah.
under its own cycle. So if you're electrical equipment manufacturer, HVAC manufacturer, which triples or 5x's your order book now, then it's not going to be forever, and then someone's going to be left with all that capacity that the companies invested in.
Yes, the build out will not last forever.
Yeah,
Usually it's a one-off operation. Although you have to replace the GPUs, but the data center. I don't think we will build up all of the Earth with data center. Hope not.
Yeah, you have to replace stuff like I think every 5 or 10 years for every piece of equipment there is some useful life, but
Yeah, but not
it's not such a
more
pull
often.
fact. Yeah, not such a pull forward.
Not recurring revenue.
Yeah, yeah. Speaking about bubble, we also looked at some elements of the bubble that Jeremy Grantham and Edward Chancellor in one of their recent papers, they identified 10 elements of a bubble, and you can think for yourself whether we have this for AI or not. So important technological innovation. Now AI, before was
Tech.
electricity, telecoms, check. Simple, compelling story. We're never gonna be working anymore. Everything done
Yes,
by
robots will do everything. Or
it's
agents.
quite simple. High profile champions, meaning that it's Thomas Edison was during electricity bubble, during dot-com bubbles, or a bunch of tech
Bezos.
founders, Bezos,
Yeah.
Bill Gates. So now we have Sam Altman, Dario.
Yeah.
I think it's similar. Yeah, wave of new publications promoting the merits. There are some AI focused magazines or internet media. I think it's covered in the media quite extensively.
Absolutely. Yeah.
Supply machine for new companies.
Getting easier and easier to start a new
Getting
company, to be
easier.
honest.
I think the data shows business starts are on the rise in the US.
Yeah.
So the number of new companies is increasing not only in tech space, but also across different spaces. Suspension of normal valuation criteria. I think we've
Double check.
SpaceX, we've seen
SpaceX is a great example. Yeah, yeah, yeah.
immature technology. It's a tough one, but you can make an argument, yeah, that we're still early, or we
Yeah, I mean, I
are.
feel like we work with an MVP constantly. I mean, we work with a lot of AI, but definitely not the end state. Just
Yeah,
for regular people to do mission critical stuff, it's just not there yet. And it will take a while.
huge overcommitment of capital. It's in hundreds of billions of dollars, the capex. So
Trillions, I guess.
trillions, really. So the revenue you need to cover that and to make the return investment is quite high.
Yeah.
Unscrupulous and fraudulent behavior, we haven't seen that one yet, I would say, in AI.
No.
So that's the one to wait for. Usually it happens with last time, yeah, it was Enron, yeah, WorldCom, bunch of accounting scandals during dot-coms, and during financial crisis there were banks.
Yeah, we haven't seen much of that. Yeah.
Yeah.
That's why I'm not concerned this is the bursting is coming anytime soon. It's
Yeah.
just not all of these boxes we can check, maybe 6 or 7, but I think it still has to grow a little bit more
And the shakeout is basically when it already starts going
when
down.
it's done. Yeah, when then we can then it's confirmed it was a bubble.
Yeah.
Yeah,
So where do we go from here? I think here's just a summary of last couple of years since launch of ChatGPT. Our AI basket is up 450, 500%, depends on how you calculate the index. S&P 500, 90%, still amazing. Yeah, in kind of historical terms. But the AI is just sucking in all the capital and all the growth, and is driving also a bunch of performance from S&P 500, especially NVIDIA,
yeah.
the mega caps and hyperscalers.
So I'm bullish short term.
Short
Long
term,
term, it's gonna burst. But like, I don't know, 2, 3 years, I think the music will keep playing.
I think well the big one will be IPOs of SpaceX and then OpenAI and Anthropic to see how that's gonna perform. As I've said, it's gonna pop 50% on day one. I think then we
Might.
a lot, a lot of time to go, and gonna invite a bunch of other companies to go public. And if not, if it starts deteriorating or the stock price drops over the 2 weeks after the IPOs, then I think we might be closer. We still what we don't have also here is, which was not on the checklist, but during 2020, 21, we had stuff like meme stocks, SPACs, NFTs and crypto, metaverse. So
Yeah, there isn't that much of it. We have only SpaceX
yeah,
and Tesla for 300 times earnings.
there is not much
So
like really crazy stuff.
no, Bitcoin is down to earth. So yeah, I think we have quite a bit to go.
Yeah. So this we discussed, and this is
Yeah,
a summary of how we look at the AI supply chain, which starts from energy supply, really electrical generation, nuclear, oil and gas, and then goes through to semis, all the equipment suppliers to semis, all the software it needs, test and inspection, yield equipment, assembly, and then stuff which is actually inside a data center, such as electrical equipment, HVAC, networking, chips, and then the companies that operate all of that and construct that. Yeah, so the next step is LLMs, AI apps. Those
which
are
we
not,
will add soon to the index.
but we'll add those as soon as they list, and this will be a very good valuation proxy. So we'll see how really the leading top best companies in AI, how those are going to be valued.
Yeah, but it's fascinating how the biggest winners of AI race are not AI companies.
Yeah, I think we can calculate actually how much market cap is created across the chain. I think it may be more than OpenAI and Anthropic valuation combined, and
Yeah,
the Nvidia is a 5 trillion company, and
yeah.
also other big ones.
Which brings me to our bonus content about GDP. Maybe we go through it because I think it fits quite well into our narrative.
We scroll to that.
Yeah,
Yeah,
yeah. We thought a little bit about where the world is heading and who's gonna benefit after the dust settles, after the bubble collapses. Who's gonna be the winner? Because we agree AI will bring productivity boosts for sure. I mean, there will be less labor needed to get the same stuff done, so people will just get more done. So we'll become more productive, and that productivity will create new stuff, breakthroughs in manufacturing, in biotechnology, in services. Everything should improve thanks to the new tech. And in general, the San Francisco consensus says that, or what people believe is the San Francisco consensus, is that labor will be replaced by AI. And we wanted to ask ourselves, how is that essentially, how does that translate into who makes money? And I mean, our interpretation of San Francisco consensus was that the product the GDP that goes to labor, essentially, wage earners, is that less money flows to humans, more to corporates. That's why the bump in valuation, and a little bit more to owners of physical, essentially, assets. Now, then we thought to ourselves, okay, but how is it gonna look like in reality? And this is what we came up. So our contrarian view, that essentially there will be a lot of surplus to share in the economy, thanks to the productivity. But the distribution is not necessarily going to be what it is expected. Maybe it's easier to start with companies and corporates. The big rise in valuation is a predominant narrative that profits will go up across the board, because otherwise, why would you pay more for shares in a company? Because you do expect that the profits would go up, but not necessarily like that. It would seem, because businesses that used to be asset light, because they ran on ideas and IP, they will all of a sudden turn into capex heavy businesses. And barriers to entry will actually drop. So industries that tended to be monopolistic in the past, they might turn actually hyper competitive. So I would be very afraid of corporate profits in the long run. At the same time, the GDP that accrues to owners of physical assets like land, data centers, manufacturing facilities, I know, producers of any types of minerals, including rare earths. I think that's where the value from AI will end up. I mean, we're seeing already that okay, NVIDIA is doing great, but the companies that actually do the physical things that underlie this whole buildup, they are the ones that are making a ton of money. So anyway, this is just to illustrate that the consensus right now might not be right, and it's good to seek alternative assets that people are not currently appreciating, because they may in the long, like beyond 20 years perspective, may be the ones that actually appreciate, and it might not be the winners of the AI race that the most value will accrue to. So that's just a digression, a little bit of food for thought, but I hope we trigger some thinking. So we can go back to the
Go
main
back
narrative. Yeah.
to how this affects M&A.
Yes, and M&A has been great in the AI world, actually. We crunched the numbers for a number of deals since 2015, and we're quite surprised, actually, because it seems that AI M&A activity peaked already in 2020, and it is not going to hit that record probably this year. Still, we might need to wait until that happens. Obviously, there was a huge acceleration of deal making in 2020, but also I think that was the culmination of the first cohort, let's say, of AI companies when they matured. That was when we still didn't speak about LLMs and Gen AI. It was more in the traditional machine learning sense. So that wave culminated in 2020, then it decelerated during the COVID years, and the subsequent collapse in valuations has been on the rise. since 2023. But yeah, year to date doesn't look that great. It doesn't seem like it's going to be a massive volume. And I think that is driven mainly by less interest from financial buyers. We see much fewer activity. However, there is a new wave, and we'll touch on that, of actually frontier labs going the M&A route in their go-to-market motion. So I think the development is going to be extremely interesting where the market is heading. Can do a deep dive also into the structure of M&A activity and what types of companies were acquired. I mean, so the biggest group by far are the developer tools, which basically are the foundation for AI. And then, I mean, there's a huge actually diversity of AI applications that get acquired. There was a moment when definitely the machine learning, yeah, the machine learning peaked at some point. That's the purple bar at the bottom. But it's then being supplanted by other types of applications. Anyway, so honestly, huge diversity. AI has a lot of use cases, and be hard to say which is in more demand by buyers and which not. I think if you make it in AI, you see the business is quite sellable. Anything to add here, Philip?
Yes, I think in 2020 the big part was macro environment and extremely low interest rates. So you
Yeah.
can see here the financial acquirers bar is very high, and then kind of almost all of the decline is due to financial investors, while strategics continued to invest and it increased gradually. And now again, this 2026 year to date, if you double it, it's gonna be fewer deals. But it's, as far as I look at this chart, it's gonna also come from financial buyers slowing down post apocalypse and kind of being very, very skeptical towards acquisitions in general. Yeah.
Good, let's move on. Yeah, a small sample of AI valuations. Unfortunately, most of these deals, they don't get disclosed. And if they get disclosed, we don't have reliable data on, I mean, the headline number gets disclosed. We don't have underlying revenue or EBITDA figures. But from our sample, what we've analyzed, we're not shocked, to be honest. I mean, the valuations of AI companies have been more or less in line with what we've seen in other sectors of software, maybe a software and IT services, maybe a slight premium, but nothing eye-popping, really. So the private markets, again, staying sane, mainly. We don't see the eye-watering valuations like in the funding rounds. So quite grounded at EV revenue 5.4 million, EV EBITDA 15. Okay, it's a premium valuation, but I think that's shocking. But anyway, we have a small sample, and we don't capture all the loss-making, extremely high-growing companies that obviously are off the charts on these scales. So we're trying to research it. I think, I mean, the more with more data, we will be able to have more conclusive findings. But right now, this is just a very small sample, very few observations.
But I think it's a very big also diversity in the multiples and valuations from hundreds of millions for a couple of people, companies. Yeah, like we've seen with Wix acquiring
Yeah.
was a couple of guys or one person. And then
Yeah.
there's also a lot of AI wrappers or companies that just did a
That
very quick product around LLM, and those are not sellable at all a lot of
or
time.
they sell early on at a low multiple, yeah, because they don't see the future in this business. Yeah.
So it depends.
Yeah. I mean, every business is different, so there's not one size fit all multiple. And I mean, as also you saw in the previous chart, it's so diverse, actually, the
Yeah,
use cases for AI that it really depends on each individual business.
yeah, I think it was a bit easier in SaaS where you just have the KPIs, rule of 40, retention, and so on. You project
Yeah,
where you put in multiple on it. Yeah, so here it's much more nuanced in terms of technology, how defensive
yeah,
it is, what's your mode, can Anthropic do it tomorrow or release a product to kill you? So
yeah. And then if, I mean, it's not a question whether it will, it's a certainty, but the question is, can you pivot fast enough? Yeah, because I mean, and we've seen good pivots like Jasper. They've done a great job. Uh, but it's not everyone can handle it. And I mean, in this business, you have to be able to switch very easily.
yes. So a new development in AI M&A is that LLMs are getting into IT services, and OpenAI and Anthropic in the span of a couple of months. First, they announced that they're going to develop their implementation arms. They get funding from private equity funds, partnerships with some of the leading consulting firms, and then they did acquisitions. So OpenAI acquired Tomorrow AI, company out of London. We estimate it's probably £20 million in revenue, grown very fast, 150 people. And then Anthropic also acquired a similar company just based out of San Francisco, also growing to 100% plus, around 80 to 100 people. Kind of what's in it for founders or investors? I think first they're going to continue this acquisition spree, so they're going to buy more companies to develop their implementation arms, and they really understood that it's not enough just to have the models in place. You need people who will come to the customers and then show them how to use it. And then I think some private equity funds are also will start to create some kinds of roll-ups or roll-up vehicles to buy companies which operate in that space and then sell it eventually to some bigger player like OpenAI or Anthropic. So I think it's a great opportunity for IT services founders if you think a good exit over the next probably 2 to 5 years, then AI services is a thing to develop, and most of those vendors start their partnership programs. They start to develop uh, the partners, and that's probably a place to be and a place where the growth is in services. And then some traditional consultancies such as Accenture, they also buy a lot of AI native services companies. So something like Faculty AI was acquired at $1 billion a couple of months ago with only 400 people and supposed revenue multiple of 15 times, which is unseen of in IT services space. But here to get this capability and to get the founder, which is now CTO of Accenture, I think this was one of the major reasons for this deal. So previously we talked more about software and what's happening in M&A for software companies which do AI. So here are some of the examples of what's happening in IT services, which is also starting to grow. Do we speak about funding a bit?
Maybe quick. We can show. I like the comparison to the IPO volume. Yeah, and we have 5 big IPOs and SPO of Google and Meta. And I mean, these numbers are staggering. If you look at the amount of funding from these issuances, and if you look at the funding year to date for AI companies, it's 300 billion, more than last year, all of last year, funding for AI. Yeah, it's just, I don't know if we can comment on this. It's just, I mean, it is a sign that we're in a bubble also. I think it confirms this point that this build out is not sustainable. Mm, the money has to come from somewhere. These companies don't produce profit, and they will need to invest for years to come. So, it's, yeah, I mean, this makes me wonder if maybe the moment when it pops is faster, but hard to say really how long it can go on.
Yes, as it really kind of adds to the point of overinvestment in infrastructure. So if everyone is investing and they're in a bit of a prisoner's dilemma that they cannot not invest, and they
Yeah,
don't invest in AIs and they lose. So eventually everyone is worse off. Yeah, and everyone's over investing, but you cannot escape this. And so that
yes,
continue, and I think what we've shown in the beginning, the benefits will go to all the companies that do the construction, hardware, equipment, and so on and so forth. Yeah, so they are now the choke point, the bottlenecks are there. The money is available, I think, will be available for all of those companies, and they just have to overbid each other and drive the prices up of everything down the chain. Yeah, so here's some example valuations of companies in AI, but those are funding rounds, so those are
yeah.
most of the time.
But it's interesting to see how they are compressing because
Yeah,
the companies have grown so much. Yeah, they don't look so crazy here, to be honest. Or maybe we got used to very high multiples. Yeah, but they're definitely down because the companies have grown. Since last year, they're down.
okay,
So that's it. We arrived on time.
more or less, yes.
Yes. We didn't get any questions.
We
So, or we
some
did. We did. Oh, okay. Any feedback on M&A of vertical AI solutions? That's a good point. I have mixed feelings. Um, because on one hand, in vertical software was considered a safe bet thus far. By extension, vertical AI should be the same. But honestly, I mean, Claude is getting so smart and you can train it to do vertical stuff so fast, so easily that I don't know if there's much sustainability of vertical AI solutions, unless they are tied to some data source that is very specific to that vertical. I mean, I don't know if you have something for the sea, the maritime industry, and you come up with a sensor or something that is proprietary that you can bundle with it and provide intelligence with it, then perhaps. Yeah, but in general, not that great. Yeah. Oh,
I
another
think
question.
I
Okay,
think
when you start.
it also depends on the vertical because every vertical is different, and you gave a good example of something like maritime software or something for science. Yeah, so something very niche and very specific. I think this may be kind of less um, subject to the disruption by AI. But if the vertical is something simple like software, I don't know, for schools or for education, something like that, which, where there are hundreds of players across different countries, and AI definitely got this code base and this knowledge, I think
Yeah,
more exposed than something which is super, super niche.
yeah, yeah. We have another question, good question from Ash. Productivity grows as an AI benefit. How exactly? It requires real change of people behaviors and processes, something only people can drive. I fully agree. Uh, we talk to a lot of companies, we see very different behaviors. But I think, I mean, right now it's a competitive edge for many companies who embrace AI. They grow faster, and they can deliver quicker. Mainly, we see that in software engineering, um, because engineers can get much quicker with the use of AI tools. I mean, it's not like 10xing, although I recently spoke with one AI researcher.
Hello? Yeah.
Um, but I agree. I mean, it requires people to change, and requires sponsorship from leadership to drive this change. It's not going to happen by itself, and actually, also governments, local governments will need to contribute to facilitate that. Because I mean, in Europe, we're from Europe. Uh, Self-driving cars like 5 years behind San Francisco, and without that, it's not happening. No. So it has to be a concerted effort. Uh, sure. Philip, another question. You take it?
Yeah. The physical side benefiting played out in telecoms. What would be the AI? Look at where tower codes are and where Nokia and Ericsson are, so where to focus
Yeah,
land shared AI infra is. What would be the AI tower code?
brilliant question. So brilliant. Thank you, Ash. Yeah. I mean, AI Tower Co, it's gonna be data center co or energy co,
Grid
or actually it's gonna be bundled probably energy generation and data
distribution.
centers because you need to build them close to cheap energy sources. So I think that will be the ones that benefit, plus maybe some kind of mining because you need a lot of rare earths, I guess, to drive all the robotization of the economy. I mean, in general, metals, copper, steel, aluminum. I think this is all up and coming, these industries.
Yes, for me also energy grid,
Yeah,
distribution. That's where the bottleneck is and where the uh, monopolies are actually. I don't know if you can invest in those. In most countries, it's somehow regulated.
yeah,
Everywhere where there is a monopoly power or some kind of natural limitations.
yes, yeah. And I mean, we should mention China. I mean, I think China is going to be a massive beneficiary uh, because all the build up of the infrastructure, I mean, they will be the ones manufacturing the components. Uh, I mean, that's what happened also in telecoms, yeah, because the Nokia and Ericsson were replaced by Chinese vendors, and I think it's gonna play out very similarly here. Europe is strong actually also in these old school electrical engineering technologies. That's encouraging. Next question, Pete. Any patterns you recognize in the buyer universe, PE, Constellation, corporate? I mean, everyone is curious. I think overall skepticism, I think we see a lot of skepticism from Constellation-like companies. I mean, they're not buying high-flying companies. But all in all, we don't see that much adjustment in strategies of acquirers. I think very few people are taking bold moves, transformational deals. I mean, Accenture, yeah, good example. They take bold moves, but I mean, we've scanned AI companies. I mean, we scan them constantly. Not that many get acquired. I think a lot of people are taking it slow and trying to figure out where the market is heading.
Yeah, even in IT services, it's not like everyone's snapping AI companies left and right. Yeah, like for
Yeah,
not a lot of AI native IT services companies, but also I think from buyers on the OpenAI, Anthropic, and Accenture are active as of now. The other one
yeah,
in wait and see mode and protecting their core business.
yeah, yeah. Another one from Ash, a question, which I love also. Uh, is there a people-oriented opportunity space? 8 billion people, many will struggle, but will still buy something. Who will sell what to them? Governments could be big clients for something like a people-oriented or human-centric solution. So we ask ourselves this question today, and we look at the structure of GDP. And honestly, I mean, the whole tech sector, not that big in GDP. Uh, and I mean, the backstop is the government, to be honest, because they can just tax everyone and do public projects, hire people like in the Great Depression. Uh, so I think that's the last resort if really people have nothing to do. Um, but honestly, I mean, there are so many industries that will need people because I mean that's the nature, like hospitality, uh,
Healthcare is growing like crazy.
healthcare services. Yeah, I mean, you want to interact with people. You don't want to buy your coffee from or to talk to you about wine from with a robot sommelier. You want someone who has the human experience. So I'm not that concerned. I mean, there will be a transformation. I'm from Poland. I've seen this when Polish economy transformed from communism to capitalism. And I mean, all of a sudden, 25% of people found themselves unemployed because their skills that they were trained in heavy industry, I don't know, in managing state-owned businesses, administration, they were just completely unapplicable to modern globalized economy. Uh, and I mean, there might be a gap, and we struggle also with hiring people because juniors uh, are very hard to train with AI because it's so much easier just to have AI do something than give it to the junior person. So I mean, there will be a struggle, but I think we'll emerge with a new structure of economy, which is much more service oriented, even more than now. But also the type of services will
Yeah.
differ probably. I mean, I think a lot of more will be empathy based services, like where you really want to get I think an emotional value out of the interaction, and not necessarily only the functional value, because the functional value will be commoditized and will gradually go to zero. So maybe we'll seek higher things in our interaction. That's a positive view. And then we have a bonus slide also. We can the other bonus slide to close off this session. Uh, we thought about two scenarios, utopian and dystopian, and uh, where it's gonna land everything. Um, we don't know, obviously. I love it to be the utopian version. Uh, I'm sometimes afraid it's gonna take a dystopian um, route, and probably will oscillate between one and the other in the coming years. But anyway, let's finish on the utopian, I guess, on a positive note. Uh, that markets and valuations, so we'll make a lot of money because the capex really benefits not only the owners of Anthropic and OpenAI, but the broader economy. Uh, we will have to work less, and we'll find new jobs. I'm asking my team to fire me and replace me with agents. It's not happening yet, but maybe someday we'll work 2 days, and everyone will enjoy this work. Um, the civilization will be able to focus more on creativity and connection with others. Um, and maybe AI, I mean, will bring governments, international organizations together, and we will find a new world order where that benefits everyone and prevents further conflict. So probably not all of it will happen, but I hope a lot of this turns true. So with this, if there are no further questions, I think we can conclude. Yeah, Philip?
Yes. Yes.
Been great. Thank you all for joining. Thank you for the great questions. We'll be uploading the video, so you can watch it, you can share it with others. So you'll get a link after the webinar tomorrow. So thank you all. Thank you, Philip.
Thank
Thank you,
you.
team, for
Thanks.
preparing
Bye.
this. Bye bye.